Good morning, everyone. We are live. It's currently 7:37 a.m. 7:38. Market is opening in 1 hour and 22 minutes. So I'm just gonna do my high time frame analysis and stay off of the lower time frames for now. So let's look at the daily. Okay, so earlier this week, you can go watch my analysis on Monday. We did see, I think what we saw, I think we saw price up here, somewhere around there, at 1.3347, somewhere around that level, where we saw price rally up, close to this gap, and like I said, price looked like it was gonna push up into this resistance level, and as you can see, we did. And Tuesday and Wednesday were our first days out of like 3 weeks. First two red days on the pound dollar in 3 weeks. That's just crazy. Anyways, on the daily there's not much. It's not much at all. I mean, you have this wick here, which could be a nice target. If we do get a bearish day today, this might be a good level to target. Just considering that it is a wick on a daily level, also obviously a huge wick. Wicking into the middle of nowhere, there's no resistance, nothing else, so this will be a good level to target if we do get a bearish trend for the day, which would be a very likely scenario considering we bounced off of this resistance. It's basic stuff. But let's just look at the market structure. Yeah, I mean the market structure is clear. On the 4 hour it's very, very clear. Yeah, you can't really, I mean, I guess, yeah, from what I've what I'm seeing here, I mean, let's take a look at the 1 hour. Just look here. We broke market structure over here, right? Broke market structure exactly on London sessions close on Tuesday. Alright, we came down, pushed up, came back down, and from what I'm seeing in the market structure, let me explain it. So you see this wick. This is, for me, 9 times out of 10, this would be usually something I would base my entry on a trade. For example, come on, if I see, let's say for example I want to enter on a market structure break or a continuation, right? Let's say for this example we're taking a continuation. Price gets down to the support level and we get a close below the support level, so we get a close right there. So I want to be entering here, right? Let's say I want to target this level. Alright, that's it, that's all trade. But before that, we might see something like this. You know, price gets down here, pushes up a bit, gets down, consolidates, pushes up, and then breaks through. Now the thing is, what gives me very accurate entries on whether it's a market structure break or whether it's a reversal, a whatever it might be, whatever my entry is, a breakout, 9 times out of 10 this would be my first signal for my entry. So I would get a candle like this, and naturally, you know, everybody knows this. Small body, long wick. It's common sense. I mean, you know, the buyers struggle to push through. Price close below, and we push down. It's not that complicated. So, but the reason I base my entry around it is because you can go test it for yourself. You know, it might be different for other assets, but what I've found, what I've found, as I've been trading GBPUSD, just GBPUSD, for about 2 years now. If you base your entry around wicks like these, or even just make it a part of your analysis, you know, to get you a sense of where price is heading next, you'll be very accurate, much more accurate, not necessarily, you know, 90% win rate accurate, but you'll be much more accurate. You'll find that these types of candles generally, they do 9 times out of 10 pinpoint where price is gonna go. Now, of course, it's not really 9 times out of 10, because sometimes you might find a candle like this, you know, it pushes up and then it closes above this candle, you know, for no reason at all. And that's normal. It happens. It has happened a lot with me. It's normal. But, I mean, look at this candle, for example, on the 4 hour. I mean, come on. How many people do you think swing traders would have bought after they saw this candle wicking into this level this strongly? I mean, that's a buy signal if I've ever seen one, you know. Well, not really, not for me, but, you know, some people might say, you know, that's a good buy signal, if you base yourself only on candlesticks and not like market structure and fundamentals. If you base your entire strategy around just like 1 or 2 candles, like I don't know, I've seen traders take like 1 or 2 candles per trade. I mean, very risky for me, to be honest. It's hard to predict what the next 1 or 2 candles might do. But I mean, just look at this candle, you know, it's the same as the one I pointed out here. Only difference being this one actually pushed down, but this one, it continued. So, you know, it's not 100% accurate, nothing is, but yeah, my main point is I just like to base my entry around these candles, just because I've found it gives me much more accurate entries, instead of, you know, taking something like this. You know, you see, okay, big candle, medium candle, small candle, and then boom, you know, you get a, what's it called, I don't even know the names. It's a whatever you call it, an engulfing candle. There you go. It's an engulfing candle. So you get the engulfing candle, and you decide, all right, let me enter here, you know, open my stop loss here, whatever, to risk the reward, whatever. I don't like that personally, because the thing is, there's no buy signal. I mean, sorry, there's no sell signal for me here. I mean, even if I go down to the lower time frames, I mean, yes, maybe on the 15 minute, maybe if you trade like a consolidation breakout and you see price consolidating, closes below, and now you take your short. But still, it's just a risky trade for me, because if you look at the market structure, that's why I need to focus on the market structure. I mean, look at this. Hara, hello, hello. So what do you expect next? I mean, this. You're expecting this next. Yeah, that's just a quick insight about why I specifically pointed that candle out. Now, of course, on the the 1 hour time frame, equalize, which pointed out to the reversal, and we got the rally down and push down. Broke market structure, low time frame, push down, and now mainly the only thing I'm looking for now, because if you look at the 15-minute time frame, which is my observation time frame, we can see this. So I mean, this would be a pretty important level for me. This would be a pretty important level for me. My reason being, we got a wick into this level support, and if you look at this, once we had like a candle like this, the candle that sets the trend, that finally decides to reverse the trend, would usually be a big candle, that gets the breakout. It specifically closed below this level. We had a push back up and immediately reversed back down, and then failed to close above this level ever again until now. We still haven't closed, but we are pushing back up into this range. So that makes it a pretty important level for me. If we do not push up, I believe we would, considering we're consolidating and it's almost 8 AM, usually an hour before market open, price starts to get some volume. So if we do see a push, we might see one up here, and that might be something to consider for me, to take a trade around this level. But sorry. But yeah, first I want to verify this fact on the higher time frame. So on the higher time frame, 4 hour, we are bearish. So that immediately stops any thought that you might have to go long should be cancelled. You cannot go against the higher time frame direction. I will not go against the higher time frame direction. So any thought, any buys, out. They are out. Let me mark this up. No. Because if the higher time frame, middle time frame and lower time frame do not align, then you shouldn't trade. Maybe not for you, but for me. That is my rules, and you must follow your rules. So 4 hour bearish. This might be a target level. For me, I could target this level, this week, the low of this week. Find a trade on the 1 hour, 15 minute. 1 hour, as of right now, if you zoom a bit out, we are clearly bearish. I mean, obviously. We did create equal lows with these two, but yeah, we pushed up back into this important level, like I said. Got a retracement, retest, and now the main thing is, now it's just about waiting for the middle time frame to align, then the 5 minute, then the 1 minute, and well, it will first be the 1 minute, then the 5 minute and the 15 minute, and then you execute. So what I'm looking at right now is one of two things. This and this. This would be my most preferable option for position building. You know, you can add a lot of positions all the way down to here. Whereas with this one I might be able to add 2 or 3 positions. So first one will definitely be a better option for me to take. But as of right now, that's all I'm gonna be looking for. Just, you know, look at resistance, wait for price to get the resistance. If we do get a break in resistance and we start rallying up, I will have no trade for the day, more than likely, because of the higher time frame, the 4 hour that is bullish. I mean, sorry, the 4 hour is bearish. So if price starts to rally up, I will have no trade for the day, because I need all time frames to align. Or if we get up to here, fail to break, you know, equalize, I'll wait for a market structure break on the low time frame, enter, target down here, stop loss probably above here, and nice 1-to-1, add some positions and get a great trade. Or I'll wait for the 15-minute to break market structure down here, which will indicate to me a continuation of the higher time frame trend, and I will short still down to here, add 1 or 2 positions for still a nice risk to reward. And I would say that is about it. Nothing really else important. Let me just show you again. That or that. Those are my 2 trades. We'll either push up here, and if we fail to break and we start pushing down, I look for market structure break on the lower time frame and go short. Or we just push straight down, break market structure on the 5-minute, and we break market structure on the 15-minute. I will enter there and target there, stop loss there, 1-to-1, maybe add 2 or 3 positions depending on how the price action is during the trade. But we will see what happens, and I'll let you know. Thank you very much.